Good afternoon. Welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is Friday the 13th, and we had the market trading a bit lower here. And on the heels of that USDA report, which yesterday propped the market up. Now, if you take a look at the Friday close here, we saw corn for December trading down 7 1/4, soybeans for November down 14 1/2, wheat in Chicago down 11 1/2, and Kansas City wheat trading off 9 3/4 cents. Now, Logan, if you could walk us through the revisions that we saw yesterday in the WASDE report, and maybe explain why were we trading lower here this morning?
Yeah, I think in general we saw some follow through for corn. Certainly yesterday's production number came as a surprise, where we actually had the USDA raising expected yield for this crop. That obviously carried over into ending stocks, and as you can see here, we saw a revision higher from the August report. We're going to get to that more, though, in detail in a moment. Soybeans certainly really had the strength yesterday. Corn and wheat, we didn't really see it that much, but soybeans now are set up for another year of very tight ending stocks. As you can see here, the USDA is now projecting 13-14 ending stocks at just 150 million bushels, around 4.8% in terms of stocks to use ratio. So certainly something there for the bulls to really get excited about. But we didn't see that carry through into today's action. I think it's going to be important to watch the trade action on Monday, in particular for soybeans. Just looking at wheat here, not a huge story there. 10 million bushels higher in U.S. ending stock projections as a result of higher expected imports here. But really, the big story was corn and soybean production in particular. And looking into those numbers, that corn yield number, I think, is really something that's going to be discussed a lot this weekend for traders.
Yeah, I agree. And, I think that higher yield forecast from the USDA really surprised the market. And if you take a look at the chart here, you'll notice that we are trading lower. And it looks as though we're going to probably take out those lows that we saw back in August around 448. I think that there's definite possibility we get down around that area. We might find some support there, but I wouldn't be surprised if we take that out. Now, you got to keep in mind, though, we're going to be trading this number here until we get the next number in October. But keep in mind that the Planalytics weather intelligence that we pay attention to came out with their final corn yield forecast, and what we saw here was a significant deviation from what the USDA reported yesterday. Take a look on a state level. You'll notice that North Dakota and Ohio are the only states really that are in the big corn and soybean production areas where Planalytics expected yield to be a bit higher than what the USDA said. If you take a look at Iowa, Minnesota, Illinois, Michigan, South Dakota, those are states that Planalytics is actually expecting a lower yield than what the USDA reported in this month's report. So you wonder, I guess it really leaves the door open in that October report for them to revise yield back down a little bit lower.
Yeah, certainly, Cody. Talking to a lot of producers on the ground in Iowa and Illinois in particular right now, they were surprised by that USDA number that was released yesterday. And as you said, I think there is a good possibility the USDA may have to lower that here in that October report. Kind of this time in the marketing year, though, is kind of interesting because as we wrap up the current production, the focus really starts to shift to the demand side of the equation, and we really haven't heard about that a lot here in the last couple months, really. On Monday, we're going to get some good information as it relates to soybean demand in particular. That's going to come by way of the NOPA crush report, and if we take a look here at expectations for Monday's number, you can see that here for the third month in a row, traders are expecting less soybeans crushed in the month of August than what we saw in July. 110 million bushels here is the average trade guess. And if we look to see in how that's changed over the last several months, you can see that crush really has backed off quite substantially since about January. And really driving that is how tight ending stocks were on the old crop, and as a result, how strong the cash market's been. We've seen exceptionally strong basis for soybeans, and really soybean availability has been a big problem for a lot of these crush facilities. Now, the number we're going to be getting on Monday is really more of an old crop story, I would say, but it has important implications for the new crop if we think about demand. The USDA is taking quite a bit off expected soybean production here since the July report, about 75 million bushels, but we really haven't seen substantial changes to the demand side of the balance sheet, and I think that surprised a lot of traders yesterday, and that really resulted in a lower ending stock number than expected. So bottom line, I think people are going to look at this soybean crush number and see that there is some room for revisions lower in terms of demand, especially if stocks are able to be 150 million bushels here through the remainder of the growing season.
You know, Logan, one thing that you mentioned that was contributing to some of these lower crush numbers was the higher cash market prices. But one thing that we can notice here is this week we saw another significant drop in the cash price here for the basis for both corn and for soybeans. And of course, this is a direct result of the southern harvest and grain being available, moving up the river into some of those northern areas that need it. And of course, I think we're going to continue to see basis depress as we move into harvest. Take a look at some of these maps here. We're looking at the cash soybean market. You're noticing that we were off as much as 60 cents in the northeastern part of the grain belt. And you look at corn. You know, we are also had that weakness in the northeastern grain belt. When you look on average, we saw corn lose 50 cents in basis across the nation, and for soybeans, we saw it move down 35 cents. So it's been incredibly volatile, very directional, and we continue to trade lower here when we look on a national average of basis.
Yeah, you know, it really seems like right now that old crop basis in particular is collapsing, but there still does seem to be a few elevators out there that are aggressively bidding old crop bushels. If you guys have any stored bushels and have questions about or want help finding maybe that last sale here for the old crop, feel free to give us a call here at the office. Our number is 877-472-4607. You know, in general, Cody, I think that kind of wraps up, though, what we saw this week for the grain market. Certainly a lot of new fundamental information for traders to think about over the weekend. We'll have to see what next week brings. We'll be back here on Monday to report on the NOPA crush figures. Until then, have a great weekend. We'll see you on Monday.